Yes. Hello, everyone. Happy to see you all here because today we're about to discuss the UK second estimate GDP quarter-on-quarter data release. We do not expect any significant changes from the prior figure. However, yeah, 0.5% compared to the 0.5%. But however, we will still observe the reaction on the sterling. UK will release the second estimate GDP of Q3, and the Office for National Statistics is expected to show UK economy grew 2.3% in the third quarter compared to a year ago. On a quarter-on-quarter comparison of GDP and unrevised 0.5% growth is predicted between July and September. The figure comes 2 days after the UK Office for Budget Responsibility is in its autumn statement revised its 2060 UK forecast higher, courtesy of which the sterling has been able to hold its losing streak and sustain above 1.5087. It is quite clear that the pair is on relatively positive footing now than it was a couple of days ago, and the second estimate is expected to keep the growth rate unrevised. As already mentioned, any upward revision of the GDP is likely to be well received by the markets and could see the pair retest 1.5248. On the other hand, a downward revision would undo the positive impact of the OBR's forecast and send the pair lower. Yes, and let's take a look on what do economists expect from this economic data release. We have the Bloomberg survey summary. According to their views, where the median estimate stands at 0.5%, average estimate stands at 0.5% as well. High estimate stands at 0.6%. Low estimate stands at 0.5 again, and number of estimates this time has reached 33. Since 1980, the UK has moved up just one place. The purchasing power of UK gross domestic product per head was then 68% of US levels, with Italy's 84%. That's kind of like a small look into what happened basically compared to other countries. The chance that the UK real incomes per head will overtake those in the US are 0, according to the Financial Times. UK output is at present far below pre-crisis trends. Thus, the OBR forecast potential GDP in 2015 is 12% below the Treasury pre-crisis forecast. So will the body forecast for be 13% below the pre-crisis trend by 2020. In other words, potential output is now forecast to grow at close to a little below its pre-crisis trend rate, though the losses and levels will be permanent. Yes, and the UK will not become the most prosperous major economy in the world, even to do as well as the OBR forecast requires a powerful revival of productivity growth. The private sector must run exceptionally large financial deficits, while the risk of financial crisis must also be successfully eliminated. If this were to happen, the period ahead would feel markedly better than the recent past. Indeed, it would feel like a return to pre-crisis normality, but this is far from a sure thing, and much could go wrong. Basically, more questions than answers provided by Financial Times this time. And we have traditionally the Dukascopy community member survey. On the sterling dollar currency pair, as you can see, the traders went bearish this time, 57.45 versus 42.55 bullish close. And we have a couple of comments. I hope that you guys are fast readers, because unfortunately I will not be able to read them for you or with you, and I need to get the floor to Michael, who is going to discuss the technicals. Please.
Thank you, Paulina. Hello, everyone. So for today's data release, we have the cable, of course, the most traded UK currency pair. And the sentiment for the given pair is quite bullish at 54.33%, with the sterling being bought in almost the same percentage, 54.54% of all cases, and the US dollar being sold in even more, 58.16% of all cases. Depending orders, however, are both concerning independent orders both in the 50 and 100 pip range here to sell the sterling. In the 50 pip range, it's 58.67%, and in the 100 pip range, it's 55.86%. Market participants of other brokers are also somewhat bullish, with Alanda at 54.23% of their traders holding long positions. Daily FX has 61% of traders being long the sterling, and Saxo Group, however, has almost 59% of bearish traders. So if we move to the market reaction table, you can see that the largest reaction for the cable was 31 pips in the end of May, and the smallest one was only 7 pips 3 months prior to that. So the approximate average reaction we could expect today is around 18 pips, and based on this reaction we set the take profit and stop loss levels accordingly. And unfortunately the cable has experienced quite a slump just when the new hour began, and I had to adjust these levels several times after that. And right now the approximate ones are: we take profit around 1.5075. We have somewhat the 4-hour S2 close by, which could bolster this resistance, while the stop loss level is located at 1.5039 between the weekly S2 and the daily S2. So this could also be a rather tough support. However, the cable has been also supported by this given trend line since more than the middle of the week, and that's a rather good range for the 5-minute chart which we have. But unfortunately, it's getting tested right now since the exchange rate dropped significantly. But because of this trend line, I'm hoping the pair would recover today, and this is why I have the positive surprise trading strategy, that we will hopefully see a reaction to the upside and see the pair return within the uptrend. So the technical indicators are not actually helping us today, since they are giving mostly mixed signals from the 10-minute to the 4-hour time frames. But the daily ones, however, are giving us bullish signals, so suggesting that the pair could return by the end of the day. And with the only fundamental data being today the UK GDP, maybe this will be the main gauge of the recovery towards the uptrend. But we will see if that's true or not. About other forecasters, according to the Bloomberg survey, the IHS Global Insight expect the GDP to grow at 0.5%, so basically unchanged since the unchanged of the forecast, but still slower than compared to the previous data. Royal Bank of Scotland expects the same percentage, 0.5. That's the quarter-on-quarter data. While the year on year also is expected to remain to fall in line with expectations, to grow at 2.3% over the year. We should have the data in approximately 10 seconds. We might also see no reaction today. I'm still hoping for the upside. And yeah, the data actually fell in line with expectations, both in the quarterly and the yearly one. And we see a really small reaction to the upside right now. Only 8 pips, maybe some. Well, yeah, it's actually growing. 12 pips right now, so still slightly less than the expected reaction. But nonetheless, this is a recovery, and we will probably see the pair edge higher and reach the trend line once again, and thus the trend line will remain valid, and hopefully the cable will continue recovering. So I guess that will be all from my side today, and back to you, Paulina.
Thank you, Michael. And yeah, nevertheless, the actual numbers came out just as well as the as we've expected it to. We can still see quite an interesting reaction on the pair. And guys in the chat section, as usual, we would like to thank you for participation and for your comments. And don't forget that today we're having a webinar by your beloved Dukascopy Research Team at 12 GMT. We will be featuring our traditional and some new interesting topics. So basically, don't forget to participate. And meanwhile, in about half an hour, our community members will be giving a webinar on trades in current week in focus at 10 GMT. And in case you want to follow up on our schedule of webinars for today, make sure to follow the link in the chat section. Thank you, everyone, once again, and see you later.